Hello and welcome. You are watching Last Tick here on News 9 Live. I'm Krishna Kumar and I'm being joined in the studios by my colleague and friend Suyash Maheshwari. We are, as always, bringing you a wrap-up of the day's trading session at the Indian stock markets. But bear in mind, we have a lot lined up on the show because huge corporate earnings that have come out. Adani, Dabur, and now the latest, Suyash telling me
Tata Motors.
Tata Motors has also come out. We'll be bringing you the lowdown on all those corporate earnings as well. But we first begin with a quick check of how the stock markets close. Sensex up nearly 500 points, while the Nifty has managed to again hold on to that 19,100 peak, hasn't it, Suyash?
Yes, Krishna. So after a strong opening, where we saw Nifty opening above that 19,100 mark with a gap up opening of about 102, 120 to 130 points, we saw some pairing of gains where, by the mid morning, the markets was trending lower. In fact, it broke below that 19,100 sort of levels. But, from there on, after 12 p.m. or so, the markets took off again. Bulls came back into action and Nifty managed to rescale that 19,100 levels. By the end of it, Nifty settled about 0.76% higher, as you can see on your screen, above the 19,133 mark. Sensex, on the other hand, was also up by about 490 points or so, and settled above that 64,000 sort of levels. The broader markets, Krishna, were buoyant today as well. They even managed to outperform the headliners. Both mid-cap and the small-cap 100 were up about 1.4 to 1.3% in the green, and volatility also, dipped by about 8% or so, and it settled at around 11 mark, so which augurs well for the bulls. Now, the factors that are contributing to this run-up. First, today was a weekly expiry, so after a gap-up opening, I think that kind of scared off the bears, and we saw a bit of short unwinding taking place, and that's why after the mid-morning, we saw a uptick in the market, and even market managed to end above that 19,100 mark. Another reason, which is the global cues, they have turned in favor of the bulls overnight. US Federal Reserve decided to keep the interest rates unchanged in the November policy meets, and even the commentary that came out from Powell and team, it was perceived as rather dovish, because it indicates that at least for now the interest rates or the interest rate hike cycle has topped out. So this has created a risk of sentiment in the markets, and all the global markets today and yesterday, which came out in the after midnight, they were seen rallying and posted strong gains today. Another outcome of the policy decision was a pullback in the 10-year treasury yields, which fell almost 20 basis points overnight. They were hovering around 4.9% or so, on Wednesday and Tuesday. They have eased to about 4.7%. Brent crude has also eased by about 3% overnight, and it's currently hovering around that $85 a barrel mark.
Right. So factors contributing to today's rally, very important. US interest rates, bear in mind, are at a 22-year high, but only the good news is that the US Federal Reserve, US Central Bank, has chosen to not hike those interest rates any further, and that's causing the buoyancy among bulls, is the word coming in from Suyash. Suyash, of course, we're going to take this further with Mr. Amit Gupta, who now joins us live on the broadcast here on Last Tick. Amit, always a pleasure talking to you, but tell us, we saw the markets cracking through last week and even till yesterday, but today it's a great bounce back. Sensex up 500 points, Nifty holding on to its 19,100 levels, and Sensex is above the 64,000 peak as well.
Yeah, hi. Good afternoon, Suyash. Good afternoon, Krishan. It's a bounce back trade after the Fed commentary last night. My sense is the breakdown which we saw in October, that is still not invalidated. So we are probably seeing a little bit of push and pull within a large range, 18,800 and 19,300. In between, we are seeing sharp rallies as well as sharp drawdowns as well. So even though the market has rallied today, also there was a weekly expiry as well. But my sense is that we are still in a sort of a broad range only.
Amit, hi, Suyash here. Now, I was getting to that. I mean, the kind of price action that we have seen in today's trade, a good bit of a bounce back. Nifty almost up 1%, Sensex almost up 1%. Broader markets scaling that 1.3 to 1.4% rally in today's session. Do you think the overall sentiment, which was bearish, has turned, after today's rally, or is it still a sell on rise sort of a market?
No, I think it's still a sell on rise kind of a market. It's just that there are still very attractive stock specific opportunities. If you look at Nifty, it hasn't done much in the last 2 years. It topped out at around 18,400 in 2021 October. And in 2 years, it's about at 19,200. So that's about 4% CAGR move. But I don't think markets are expensive at the Nifty level. So that's why you keep on seeing these kinds of buying sentiments. But as far as the overall economy is concerned and how the interest rate would actually play out from here on, my sense is that we are still in a sort of a sell on rise market, and eventually we'll see a breakdown even before maybe elections, general elections. There will be opportunities to buy at more attractive prices and more attractive valuations. But in short term, it could be a sideways market.
All right, short term, it's going to be a sideways market is the call coming from Amit. Amit, stay with us because we're going to get to the all-important big news for the day as far as markets are concerned. That's we're still in the middle of earnings season, still, and some big results coming out where Adani Enterprises, Tata Motors and Dabur as well. In fact, Tata Motors results coming in just as we began this show here on News 9 Live, which is last tick. There you go on your screens. Tata Motors is FY24 second quarter earnings. Profits up, operating profits or EBITDA up, revenue up. There is a talk to us, Suyash. Can you help us break down these corporate numbers?
Yes. So Tata Motors has turned profitable in the from a year ago period. I think the profit figure, as you can see on your screen, stood at about 3,764 crore. It's largely in line with what the street was estimating. Street was estimating a figure of somewhere around 3,800 to 4,000 crore. Now this was on the back of ease in commodity prices as well as a better product mix that Tata has been able to provide on a year-on-year basis. Revenue, on the other hand, came in at about 1.05 lakh crore rupees versus 79,000 crore in the year ago period, which is about a 32% year-on-year jump. EBITDA, on the other hand, EBITDA, which is earnings before interest, tax, depreciation and amortization.
Or in the simplest of terms, earnings before interest, tax, depreciation and amortization, in simplest of terms, is called as operating profit.
Net operating cash flows, because it's adding back that depreciation and amortization. So you are not really, because it's provisioning, right?
Okay.
So if you add it back, you see the overall net cash flow that the company was able to generate from its operations. So that is up almost 150%, as you can see on the screen. Probably on on the back of a softening of commodity prices. EBITDA stood at around 13,767 crore in this quarter versus 5,571 crore in the year ago period. It was slightly ahead of what the street was expecting, about 0.6% ahead of the street's estimates. Margin also, was up by about almost 610 basis points to 13.1%. In the September quarter versus 7% in the year ago period, also slightly ahead of our estimates by about 30 basis points. So all in all, the numbers are looking great, Krishna, at least the first sprint.
Right.
We'll at least obviously get to hear more from the
Let's do that with Amit. Amit is still with us. Amit, Suyash there telling us what the Tata Motors numbers looking like. What are your thoughts on Tata Motors, and more importantly, how do you see the stock markets, the stock reacting come tomorrow morning?
Yeah, I think it was, the numbers were good. It was pretty much expected, given the commentary which has come, at the quarter start. Remember, a lot of these companies actually give out commentary on the sales side right at the start of the quarter. Also, we get the monthly numbers for auto sales every month, every first of the month. So I think a lot of the good numbers was in the price. It's now a fourth consecutive quarterly profit for Tata Motors. The sales of JLR, Jaguar Land Rover, they've really boosted margins. And given we are at the start of the festive season, which would extend till January, my sense is that the company would do well in this quarter also, and at the start of the next quarter also. So I think, yeah, something look forward for the investors in Tata Motors.
And talking about the stock, of course, the results only came after the market hour, so the street will only get to react to it come tomorrow. But the stock ended about 1.5% higher in today's trade, kept building onto the gains as the session went by. And I mean, Krishna, it has been a clear outperformer when it comes to the passenger vehicle segment in comparison to your Maruti Suzuki and Mahindra. The stock is up about 61% on a year-to-date basis. On a 6-month basis, it has given returns of about 32%. In the last 1 month alone, it's up about 4%.
Wow, that's the lowdown as far as Tata Motors stock is concerned. And with those kind of numbers, those kind of corporate earnings, you expect the momentum and the buoyancy, the Tata Motors stock to keep going, I'm sure. On that note, we will continue with back-to-back earnings. Let's bring in the biggie, Adani Enterprises. Talk to us. What are those numbers looking like?
Very interesting set of numbers, and I'm very curious to get Amit's opinion on that. Now, revenue was down about 41% on a year-on-year basis, coming in at 22,517 crores in the September quarter versus 38,175 crores in the year-ago period. Net profit, on the other hand, almost halved. It was down about 50.5%, coming in at 228 crore in the September quarter versus 461 crore in Q2 of FY23. EBITDA, on the other hand, that's where the curiosity takes place, because EBITDA, you see clearly revenue and profits have declined.
Yeah.
EBITDA, on the other hand, the margins have expanded by 590 points. EBITDA has improved by 30 basis points. Amit, what's going on there? How do you make sense of these numbers, sir?
So see, Adani Enterprises is quite a complex business. There is a whole solar and wind manufacturing. There is airports business into it, and there is some sort of mining industries as well. Remember last year we had this Russia-Ukraine war, so a lot of prices for a lot of these raw materials was really up. The tourism sector was just coming along. But what we have seen is, if we are comparing year on year, then the numbers really look good. The EBITDA has sort of increased on almost 5,000 crores, more than 5,000 crores actually. The cash equivalents have also increased. I think a lot of this has got to do with the base effect, and also given the new ventures which they are thriving now, which are becoming a little bit mature. The utility and the transport business is now almost a cash cow for them. That's why the increase in EBITDA and the cash accruals, as far as I can understand from the basic reading of the results. The airport business is actually doing very well. The passenger movement is up, air transport traffic movement is up, cargo is up. So a lot of these things have picked up really well over the last 1 year or so, and that's why the numbers have got a decent boost on a year-on-year basis.
Now, sir, as you mentioned, the business is quite complex. To give some clarity to the investors, is it high time, that it's, Adani Enterprises carves out some of its businesses as it did in 2017?
And consequently unlock more value in its stock?
Yeah, I think that is the plan. They've already, it's in the pipeline. They've already informed that they are looking to hive off airports business. They're looking to hive off even the new energy business, which is in this Adani Enterprises exclusively for the green hydrogen. So my sense is they will do it. Obviously they were a little bit hit by the Hindenburg report earlier in the year, so things have gone on the back burner as far as the value unlocking and demergers are concerned. They have to first look at the businesses and do more deleveraging, which they have done in the last 6 months. And my sense is once this state and general elections are done next year, we'll see see them accelerating more, and we'll see some more subsidiaries of Adani Enterprises getting listed on the stock exchange.
Now, Adani Enterprises, even the stock movement was quite interesting. It was trading with gains of about 3.3% to 3.3%. Was the top gainer in the Nifty pack. Results come out, the stock dips and ends on a flattish note with a negative bias. In fact, it's down 0.15% in today's trade at around, and it closed at 2214 sort of levels. Even since the Hindenburg report came out, the stock is currently about 38 to 40% down from January 24 sort of prices. And it was, the stock was seen making a good bit of recovery in the last 6 months. In fact, if you look at the 6 months price chart, the stock is still up about 20%. But in the last 1 month, Krishna, it has corrected by about 10% or so. So clearly, weakness is setting in for Adani Enterprises.
Weakness setting in for Adani Enterprises. We will have to understand tomorrow morning, how the stock opens for trade and after a day of results like this. And we'll keep it with the corporate earnings and take it forward to a big FMCG major, Dabur, which has also come out of their numbers. So Suyash, talk to us, how are Dabur's numbers looking like?
Dabur's numbers are looking pretty good. In fact, it has met the street's expectation as far as profitability is concerned. However, revenue was slightly below estimates. Now, if you look at the profit figure, the profit came in at around 515 crore in the quarter gone by versus around 491 crore in the year ago period. So this is about a 5% rise on a year-on-year basis. Revenue in the previous quarter stood at 3,204 crores versus 2,986 crores. So a 7.3% increase on a year-on-year basis, but it's a slight miss. As per the street's expectation, is down by about 0.3 to 0.4% compared to what the street was expecting. Now, this was on the back of a miss on the volumes front. Street was pegging in a volume growth of about 3%. 4 to 5%. The domestic volume growth came in at about 3%. So that was a major dampener for the overall earnings, which was largely good. And if you look at the EBITDA, it jumped about 10% on a year-on-year basis, coming in at 661 crore in the September quarter versus 601 crore in the year-ago period. Margins have also improved by about 0.5% or 50 basis points, coming in at 20.6% versus 20.1% in the year-ago period.
Right, but the big concern, as you're rightly pointing out, especially when it comes to FMCG companies, isn't that the case, Suyash, that the volume growth number is what the market looks for, because that's an estimation of the amount of business that FMCG companies are doing. Are people buying enough of their soaps and enough of their fast-moving consumer goods on a regular basis? Volume growth is a crucial indicator of the consumer sentiment for FMCG products are concerned. Amit, let's quickly take this across to you. How do you view these Dabur numbers? Net profit, net sales, even the margins and EBITDA seem fine, but the fact of the matter is that the street is disappointed with with the volume figure, which is coming a full 1% lower than what they were expecting.
I think the numbers are pretty much consistent with what other FMCG companies have already reported, whether it is HUL, ITC, Nestle, or even Tata Consumer yesterday. So there is a clear stress in the rural segment of the markets, and the volume dip which we are seeing in most FMCG companies, including Dabur, that is sort of putting a lid on the overall revenues and the profitability of these companies. My sense is that we have to see how the Rabi crops sort of pans out over the next 3-4 months, and if there is improvement on those macroeconomic indicators, and then there is a positive consumer sentiment because of the festive season, then we'll see a sort of a gradual recovery in the rural markets. The urban market is doing well. The margins there are still as per the expectations. But I think we'll need a push from the rural side of the markets in the next 3-4 months to improve the volume growth, which has sort of seen a dip over the last 2 quarters.
Sir, talking about demand from the rural market, I was also reading the management commentary. I think the problem is two-pronged. First, the rural consumption has not really picked up, and second, at least from HUL's commentary, that small regional players and local players are eating away from the market share, at least in the tier 2, tier 3 cities. So going ahead, do you think this will be a problem for FMCG, especially the consumer staples?
Yes, the HUL commentary which you are talking about is actually pretty much consistent with what other FMCG like ITC has also said, that a lot of these D2C brands are actually eating into the pie of the established players. So people are becoming a little bit more experimental. Some sort of the shift is also because of the price discovery. People are ready to experiment at a lower cost as well. So we are seeing people, utilizing maybe a new packet of noodles or even biscuits. So that is happening. It is not so much in the rural belt, I would say, but in definitely in the tier two and tier three cities that is happening. And there is a very clear trend that sort of a move is happening from the organized markets to, we cannot say unorganized market, but it is sort of very small in nature at this point of time. A lot of these D2C brands, but because they are very active on the digital mediums and digital front, and a lot of these a lot of these consumers are actually going on Instagrams, for example, or even other social media platforms. So they are getting the hits, and that is actually getting converted into sales. So my sense is this trend is very interesting from a sort of a medium to long term perspective, and we could see some players making a big dent into the revenues of the large FMCG players over the next few months. So we have to be a little watchful in that front.
We have to be watchful, so Yash, all this talk of Dabur and competing brands, D2C brands, all that controversy around the honey that the FMCG brands
Exactly.
sell, and especially Dabur is a company known for their honey, and people's trust in whether are we even buying real honey when we buy those traditional products, or do we need to look for alternatives like the D2C alternatives that could be available, fresh honey, real honey with the bees in them. I don't know, but one way or the other, the established FMCG players are having it difficult because of this D2C brands volume growth. That's why their sales volumes are not growing. But again, it's nothing happens overnight. This is something that's building, and as Amit is talking about, we'll get to know in the medium term definitely as to how it pans out, if not the long term. But with that, we've completely run out of time here on this edition of Last Tick. Thank you, Amit, for taking time out to be with us. As always, joy chatting with you and understanding the markets. I hope to keep having you. And of course, thank you, Sayash, for being with us and putting the day's market action into perspective. And with that, we wrap Last Tick up. But don't go anywhere. In just a couple of minutes, we'll be back with Business Plus here only on News 9 Live. Don't go anywhere.